Good afternoon, traders. Jefferson Fossey here with Walsh Trading. Happy Wednesday, everyone. It is Wednesday, October 8th. It's a couple ticks here after 3:15 in the afternoon. I'm going to go through my midweek commodity market outlook here for you. Thanks for stopping by. Appreciate the views. Remember to share, like, and yeah, give us a call if you have any questions. If we can be any service for any of your hedging or trading needs. Please keep in mind, futures trading does involve substantial amounts of risk, certainly not suitable for all investors, traders, or producers. So starting off this week, we'll look at December live cattle. Today it's up $1.15. It's been working its way higher here all week long. 238.87 is where we finish, and this marks 4 days up in a row that we've had here in fat cattle prices. They got very close to breaking through that trend line resistance. Couldn't quite get there today. They did get very close to it, but I still have the number a little bit higher as far as resistance. If they stay like this, trade like this tomorrow, we should test that resistance level. I'd have that right around that 239.60 area. I think it's relatively supportive. The market held that 50-day moving average here for the last week and a half or so, and now we're bouncing right back up above it. Stochastics pointing toward higher prices. MACD starting to turn into the green down here. And yeah, I do like live cattle here from the long side. Short-term averages did flip back to bullish territory here with Tuesday's trade, yesterday's trade, continuing that upward momentum with higher highs, higher lows. My expectation, I don't know if the DC is going to get there, but I expect to see a test of those contract highs, get back up to that level that we had 243.57 here back in late August. Looking over here toward feeders, those did set new contract highs here today. 368.82 is where the November contract closed. 457 higher, pretty much strong all day long. The short-term averages flipped to the buy side here with Monday's trade here in feeders. A little bit of difference here between the fats and the feeders. Feeders got close, but they didn't really test that 50-day moving average support. Fats did. But feeders are the ones pushing their way higher. They are leading the way up here so far in these last 4 days of strength that the cattle markets have had. Contract highs and contract high close here for the November contract. I think that's relatively bullish. Expecting this market, it might take a long while here, but at this point in time, I would expect things to get up toward that $4 level eventually. I think the trend is up. We've got less cattle and more people to feed. I think the cattle markets want to continue to go higher. Looking over here toward December, lean hogs, and just a few ticks lower here, down just 7 on the day. We've been trading off this 50-day moving average here. Today marks 1, 2, 3, 4 out of the last 5 trading sessions. We've interacted with that 50-day average somehow. We did close slightly below it here today. That average is 86.20. We closed at 86.10. Well off the highs of the day, and you do have lower lows, lower highs there. Stochastics just dipping into the oversold category here down there. Short-term averages flipped to the bearish side here last Thursday's trade. The market's been working its way here lower ever since. A little bit of a bounce here. You know, they didn't finish on the lows, so it's not a bearish close, but short-term averages do look weak. I was hoping that 50-day moving average support would hold and the market would bounce right back up again, but that has not been the case yet. Below the market, I've got a little bit of trend line support here at 84.65, 84.70 or so. And below that, you've got the 100-day average giving you support here at 84.57. Last time we interacted with that, bounced off of it, and eventually we were setting new highs here. So that should be, I would think, decent support here if the 50-day doesn't hold. We'll see if the market tests down to that 100-day. Kind of looks like that's where it's headed, though. December corn, 422 here today. It's up 2 1/4 here on the day. Kind of working its way back and forth here this week. Up a nice little up day here on Monday. Tested that 100-day moving average. That's what the white moving averages are here on my chart. Tested the 100-day moving average yesterday, got a little bit of selling pressure on it. Nice little bullish day up, and it started in the overnight session. Matter of fact, my short-term averages, if you can see that there on the chart, the 5 and the 10-day, they are crossing back over into bullish territory here. Bounced nicely off that 50-day moving average here, tested it last Tuesday, Wednesday, Thursday, and we bounced up a bit above it here. Got to see the market get up above that 100-day average here. See if they can go back up, fill that gap that they left here from July 3rd to July 7th. Seasonally, grain markets tend to go a little bit higher. Corn's got a little bit milder seasonal up to it. Should get us maybe to about 440 or so, which would coincide nicely with the 200-day moving average. It's not a huge bullish trend that comes out of it, but I do think the corn market does want to trend higher here. Harvest seems to be progressing nicely. Government's closed, so we don't get our crop progress reports here every Monday anymore until that happens. And actually, the WASDE that's supposed to come out tomorrow, we won't get either. So it's kind of a mixed bag as to what's actually still available from the USDA and what's not. But stay tuned. We'll see where we go. Corn market's trying to head itself a little bit higher. Stochastics are mid-range, pointing up. MACD is still in bearish kind of configuration here at the moment to my eye, but it is trying to hook itself higher, and basically the market's kind of been sideways here for the last 5 trading days. A little bit higher, a little bit lower. Got to see it break out of that range. For the last 5 days, that range has been, 424.5 on the upside, and 414.75 testing that 50-day moving average here on the downside. Market kind of looks like it wants to firm up. Mildly bullish corn right now. Soybeans, they were up 7.5 today. Best close we've had here. Got to go all the way back to September 19th. So that's 2.5 weeks, and we're making highs here. Pretty strong move. Short-term averages are on the bullish side here. They flipped over there that way with last Friday's trade. There was some resistance here and become support. You notice we've got the 50, the 200, and the 100-day moving averages all kind of clustered between 10.28 and 10.25. Long-term averages. The market doesn't have much of a trend here, but it has been trading in a bit of a range here for soybeans. Seasonally, they tend to bounce higher here. I'd have maybe about a 10.50 or so target. Maybe that 10.60, which is the trend line resistance here from the channel that they've been trading in. The high that we had here in September, that was at 10.52 3/4. So I think 10.50 is still certainly within play. That'd be about another 20 cents higher or so from here. Not ragingly bullish beans here either. Both corn and beans are going to have a pretty big crop here this year, but I do expect the trend to continue. Like seasonally, beans tend to go higher here as well. Soy meal's up $1.10 here today for the December contract, closing at 278.10. Short-term averages in soy meal this December contract flipped to the bullish side here with Monday's trade. Haven't really had much of a direction this week. If anything, we're a little bit lower. We finished last Friday here 278.60. Today we're at 278 even for the close, so midweek, and we're down 60 cents here on the day. Seasonally, soy meal does tend to rally here a little bit. It's actually got a little bit more aggressive move higher than the soybeans usually do. If you like options, you might want to take a look at like $300 soy meal calls here for December. You've got 44 days until expiration here. If you're looking for a nice little seasonal push up, that's a good lower risk way to take advantage of that. There's other options that are less expensive here as well and get you in the money a little bit sooner. There is still going to be some resistance here before the market can get rallying here. You've got the 50-day moving average at 284.60. You've got 50-day moving average here at 284.60. Nice, lower lows and lower highs here today, so the bullish momentum hasn't quite kicked in yet. Stochastics mid-range, and they are pointing higher here. The MACD is also up here as well. I do like the soy meal from the long side here. I think seasonally it does tend to rally up a little bit. Bean oil been working its way higher all week. Short-term averages flipped to the bullish side here last Friday's trade. Monday we were up 33, Tuesday up 66, slowing down a little bit, only up 44 here today. 5-day moving average giving you decent support, I think, right around 50.68. The 10-day I show at 50.35. Stochastics hooked higher here over the last week and a half here. I like the fact that the bean oil market bounced off that trend line support. Should put us back up toward the upper end of it. Today that number would be right around that 53.67, 53.70 area. One bearish thing of note, you do see the 50 and the 100-day moving averages crossing over here with yesterday's and today's trade here as well. That is not usually a bullish sign, short of kind of usually a sign of the long or medium to long-term trend kind of changing here a little bit. 200-day average is still pointing toward higher prices, and I do like this. I do think bean oil wants to trend up a little bit. It's also got a seasonal trend to turn a little bit higher this time of year as well, although not nearly as aggressively as perhaps soy meal does. Chicago wheat was up a half a cent here today, 507 1/4, closed at a contract low here yesterday, down around that 506 3/4 mark. Seems to be finding some, or it's trying to find some support. This downtrend in the wheat market has just been overarching and very, very heavy here on the market, looking for prices to trade. Well, they got to put a low here in first. The market looks like it wants to head toward $5. You've got the 5 and 10-day moving averages kind of holding a lid on things. Earlier in September, about 2.5, 3 weeks ago, we did get a 4-day rally. Couldn't even get to the 50-day moving average. Wheat market needs a new bullish story, in my opinion. KC wheat, same kind of thing. Contract low close yesterday at 492. Today we're up a penny and a quarter, 493 1/4. Doesn't have a whole lot of downward momentum to it, but it does have a very, very strong downtrend. You can see that by looking back over the chart. Even that little rally here in September did not even get close to the 50-day moving average. The wheat market clearly staying on the bearish side. That might actually be holding back the corn and the soybean markets from trying to rally here a little bit as well. Christmas cotton, December cotton here, up 48 here on the day. Had a huge bearish day here yesterday, closing at 6-month lows yesterday here at 64.46. Spiked even lower here today, got down to 64.16, and actually kind of set new lows. 64.24 was the low that we had here on this big spike down here in April. I like the bullish recovery here from it, but the 5, 10-day moving averages have been in bearish territory here ever since September 23rd. Stochastics are trying to hook up here a little bit, but the market needs a lot of help. This looks to me, my eye, like it just was a little bit of a short covering rally here in cotton. Sugar market down 31 here today, closing at 16.32. Lowest close that we've had here, got to go all the way back to last Thursday. So the lowest close we've had here in the last 5 trading days. Not a particularly bullish sign here. We did get up above the 50-day moving average here to start off the week. Monday was a very, very strong day up. You had higher highs on Tuesday, but they also had lower lows relative to Monday's trade. Today you got a little more selling pressure. Seasonally, the sugar market has a tendency to kind of bounce a little bit this time of year, but the overarching trend is still down. The 50-day moving average giving you resistance here at 16.70. 17 cents is where I've got the 100-day. 200 days all the way up there at 17.74. They're all pointing down here at the moment. The overarching trend in sugar has been down. They are trying to break it, but we're right here on trend line support here as well. I think if we just slapped a little trend line on here across the lows that we had over the last 2 weeks, today's low is right on it. This should be a support level. We'll see if they can hold and turn the market higher here later on this week. December coffee, 8.5 higher today, 383.90. It's a very choppy market, but it does have a nice little uptrend to it. 50-day moving average giving you support all the way down here at 356.56. 10-day moving average gave you support today. That's at 378.99. We closed back up above the 5-day here. This is the highest close that we've had all week in coffee. This is a volatile market, but I do like this market from the long side. Short-term averages flipped to the buy side here, or the bullish side, September 30th. It's been very, very choppy, but the market has been working its way up here ever since. Stochastics pointing toward higher prices. MACD's not really giving us any clues to coffee prices right now. But the overarching trend has still been up. I wouldn't get too bullish on this market until we close above last Friday's high. Last Friday was a pretty good close for it. We settled at 390.75. Still need about 12 bucks or so higher to get up above that. And there's a little bit of a shoulder of resistance here, I would call that, here against the August 28th high. That was also 391. 30, excuse me, is what that says. And that those two lines here just right across there, we got to get up above that. Otherwise, you could have the potential for a little bit of a head and shoulder top here in coffee, potentially. But trend has been up, and it's been up here since, well, August 8th. And I do like this market from the long side. Cocoa market continues to fall here, down another 223 here today, dropping over 3.5%. 59.56 is where cocoa closed for here December. That's the lowest close. I got to scroll out my chart. That's the lowest close we've had here since, well, before Thanksgiving last year. Cocoa market had a real strong rally up late last winter, and they've been very choppily giving it all the way back here ever since. I don't see anything really to be bullish about here in the cocoa market right now. Expecting prices to continue to work their way down. 5-day moving average giving you resistance here. That's at 62.18. 10 days at 65.34. Short-term averages, those flipped over to the bearish side here on September 18th. Everything's still pointing toward lower cocoa prices. Quite the opposite here for gold, though. Gold is up 59.30 here at the moment. That doesn't stop trading for another 28 minutes or so here today. New contract highs, new contract high close for gold. Very, very strong market. We've had 4 very strong sessions up right in a row. The market's been very overbought here since the end of August, but it seems very content to stay that way. The trend continues. Every time there's a down day or two, I mean, the most recent downward push that we had was 2 days in a row here in September, the 17th and the 18th. Had one day down here, 24th of September, excuse me. One day down here on October 2nd, and the market continues to move higher. How high is it going to go? Well, I'm not sure. The central banks keep continuing to buy this from what the news wires tell me. People are worried about inflation. They're worried about currency risk. And the trend is up very, very strong. Next upside target I have is very close, 4,200. Probably about 4,500 is where you might see the next significant kind of pullback from. December, silver here, 92 cents higher here today, 48.44, finishing off the highs a little bit. We did get all the way up to 49.19, set a new high here for the move, a new contract high for December silver as well. But their silver's been a little bit more volatile than the gold has been here as of late. It tends to back up and fill a little bit more and a little bit more aggressively than gold does. But, yesterday we were down 93 cents. Today they're getting all that back. And they still got a little bit of time to get the rest of it back here. I think the silver market looks strong to me, at least from a daily chart point of view. 10-day moving average is going to give you support here at 47.18. We haven't really broken or interacted with that lower moving average, the lower short-term average, since we had 3 days, September 17th, 18th, and 19th. We've been higher here ever since. Market's also overbought. It's been that way here since August 22nd, a little bit longer than the gold market has, but still at this point, other than this little bit of spike high, this is not exactly confidence inspiring to my eye, the way we're finishing this far off the highs here of the session. But still a very bullish trend here for silver. Copper's backing and filling here a little bit today. It's down about a little over a penny here right now, but you still have higher highs, higher lows. It doesn't have the exuberance or the enthusiasm, I would say, that the gold and the silver markets do. Copper is much more of an industrial metal than either one of those. I think if and when we can get manufacturing back on track, and I think the market is starting to reflect that here a little bit. Short-term averages flipped to the bullish side here on the 25th of September. Market's been working its way up. These 2 big down days that we had here was when the copper tariffs were pulled off here on the 30th and the 31st of July. That pushed the market right back down, but we've been working our way back up. Upside target I'd have from here, if this trend continues, would be about another $1 higher, get up to that $6 mark. We're at 508.5 here today. The U.S. dollar index breaking out to the upside, it looks like, or at least higher than we have been here since August 1st. And we only had 3 days when we were up in this price range before. fairly strong move here, not doing it all in one day. Short-term averages flipping over to the buy side here. This strength here in the dollar might be more closely related to weakness here in the euro. They've had some political difficulties there, most specifically with the French here the last several days. Apparently their prime minister quit. There'll be another one here coming in soon. They can't keep their government together here for the moment. That might be the only thing that's hooking up the dollar here. But we're above 50, above 100-day moving average here. We are closed. Looks like we're going to close here at the highest close we've had here since August 1st. Technically speaking, that's a bullish sign. Stochastics pointing toward higher prices. MACD's in the green here a little bit as well. There's no real divergence right now between the 5 and the 10-day moving averages. Looking over to the bond market here today. December bonds, kind of an equilibrium day got going on. We did spike higher here, get up to 117.13. The low of the day has been 116.20. Looks like we're going to finish the session here right around this 116.28 level, well off the highs. Not enough to turn the day bearish here. Volume was not great, not poor, a little bit better than it was yesterday. Probably not as good as it was here on Monday. Overall, there is a Fed meeting here at the end of the month, the 28th and 29th of October. General expectation of the way the market's trading right now is that I think it's 84% is what the market's factoring on a interest rate cut up by a quarter point here later this month. They cut rates. That's usually bullish for bonds. This could be a buy the rumor, sell the fact type of trade, much like this was here back in September before the last Fed meeting. But I do expect the bond market to try to work its way higher here. 10-year notes were down 2.5 today, or are down 2.5, 112.19 here. Last trade I show, you still got higher highs, higher lows, and the short-term averages here in the 10-year notes flipped over to the bullish side here with Friday's trade. Market bounced very nicely off the 50-day moving average, closed a little bit below it on Monday, but a very strong bounce up with yesterday's trade off it, even set new lows for the week. But managed to finish very, very strong. Much like I said with the bond market, 10-year notes typically tend to go up when interest rates go down. I do like this market from the long side for that reason. Looking over to the equity markets here, still staying strong here. Zoom this out a little bit so we can get a little bit better view. S&P looks like we're going to have a record high close here today. 44.75 is what we're up on today. 68.06 and a quarter is where the mini contract's looks like it's going to finish. Higher highs, higher lows. Market's not exactly zooming. It's not making any huge over anxious or big moves or anything like that. Just slow grind higher. Market continues to go up. Seasonally, there's always a little bit of weakness here, or usually a little bit of weakness in September and part of the month of October. We've not seen that at all this year. Equity markets continue to stay strong. Short-term averages in the S&P turned to the buy side here Thursday of last week. 5-day moving average giving you a little bit of support here. 77 and change. 10 days at 67.45. Yeah, like these markets from the long side. NASDAQ, now that's making a pretty decent move here today. It's up 319 or so here today. 359 is the last I've got. They've still got another 20 minutes before they finish these markets here as well. Contract high, record high close here for the NASDAQ. Yeah, volume wasn't great here today, but the market trend continues. 5-day moving average giving you support here right around this 25,137 mark. 10 days, well, that's under the lows here of the week, and we haven't interacted with that one here since last Wednesday, but the 10-day average is at 24,979. Of course, all these markets can change direction here at any time. For almost any reason, but the NASDAQ market does look relatively strong to my eye. I think the stock market wants to continue to go higher. The Dow Jones Industrial Average, now this is a smaller basket, only 30 stocks. Not seeing the higher push that we're seeing in the S&P and the NASDAQ, the broader market indexes, but we're still up 40 on the day. Set new highs for the move here with Friday's trade, getting all the way up to that 47,323. Market's got a little bit of an equilibrium day today going on, a little bit of a doji. We started the trading session yesterday afternoon or last evening, however you want to term that, at 46.876. Right now we're 46.892, up a little bit from where we started yesterday. Not quite technically a textbook doji, but certainly enough to say, well, the Dow's looking for a point of equilibrium right here. I don't want to get bearish, I don't want to get bullish, but if we see a directional close outside of today's low and high on the range, in other words, if we see a directional close below today's low of 46,752 or above today's high of 47,081, that should dictate the next direction of the market. Short-term averages turned bullish here last Thursday as well in the Dow. Just hasn't seen the strength, but the trend is still definitely up, like the stock markets here from the long side. Russell 2000's up 28 today. Same kind of commentary there. We set the high here for it with Monday's trade. They backed up a little bit yesterday. Haven't gained everything back that they lost yesterday, but the market is still pointing higher here as well. The trend is still very strong up. And I think just in generally speaking, stock market, you look to buy it on dips when it goes on sale. That is usually a good time to get in there. We'll finish up with the energy markets here today. Crude had an equilibrium day yesterday, open and closing exactly the same price. That's pretty rare for the energy markets. Started the day yesterday at 61.73. That's where they finished. Up for yesterday. Today they're adding another 66 cents. That is a little bit of a bullish breakout. Assuming they settle it here, and we've still got another 20 minutes or so before they settle these markets. Stochastics pointing toward higher prices. Very strong volume here today. There's an awful lot of resistance though here on the crude oil chart. You've got just above the market price here. Last trade was 62.39. You've got the 10-day average at 62.55. The 50 and the 100-day are not far away from each other, 63.08, 63.09, and the 200-day moving average 64.14. Market has been kind of choppy, but has been trading in a range here for the past several months. We dipped down to the low end of it here, perhaps last Thursday. Maybe we bounce up to about that $65 range and then look for some selling pressure up there. Unleaded gas here is up a little over a penny here today. Higher highs, higher lows, but we are lower than where we started off the session yesterday afternoon, evening. Yesterday we were up, down just a little bit. Market doesn't have a whole lot of direction. We're up about a penny and a quarter here right now. Found some support today from that 100-day moving average. That might give the market a reason to bounce up. Last Thursday's low here, kind of the low end that we've been at here for the last couple of months, might give a reason to bump the market back up a little bit. I think the energy markets are all kind of range bound here at the moment, at least crude, gasoline, diesel fuel here, the same kind of thing. Bounced off the 200-day moving average here last Friday. Monday's trade here as well. Same kind of thing the crude and gasoline price are doing. It's a choppy range, but it's been kind of been trading in a range here the last few months. Don't see any reason for that to not continue further. 200-day moving average held as nice support. Should put us back up toward that maybe 240, 242 or so area before we find significant resistance. The high of the move that we had here in September 26th was 243.60. And finally finishing up with nat gas here. Nat gas is kind of on looking, well, it was looking a little bit bullish. Short-term averages flipped to the buy side here at the end of September on the 30th. Market's been choppy, as nat gas usually is. We did rally up aggressively here. October 1st, got no follow through on the 2nd, spiked higher, came back down. Had a good rally here going on to start the week. Monday was a little bit of an up day. Tuesday was very strong that day, but a big bearish engulfment here today for nat gas. That is not a bullish sign. It's an engulfing bar because we open up higher than the highs, or certainly higher than the close yesterday, and we were certainly trading lower than the lows from yesterday as well. That is not a bullish sign. Breaking back underneath that trend line resistance that we were trying to hold up above, testing off the 50-day moving average here today. Stochastics turning lower as well. Winter is coming, so usually we'll get a little bit of a bump because of cold weather, but I don't know, big bearish engulfment for nat gas. May have to wait a little while before we get bullish. I do appreciate you guys listening. Thanks for stopping by. Remember to like, remember to share. If you ever got any questions, please give us a call. Thank you.